If you are receiving Social Security benefits, a pension, or any form of retirement income, then what I'm about to share with you today is something you simply cannot afford to overlook. A brand new tax law has just been signed, and for retirees across the United States, this changes the planning landscape in a very meaningful way. Many people are already asking questions, and there is a great deal of confusion circulating right now about what this law actually does, who it affects, and whether it is something to worry about or something to welcome. Today, I want to cut through that noise and give you the clear, honest information you need to make smart decisions in the years ahead. Here is the most important thing you need to understand right away. This new law opens a 4-year window from 2025 through 2028 that could be one of the most valuable planning opportunities many retirees will ever see. If you take action during this window, you may be able to significantly reduce the amount of federal taxes you pay on your retirement income over the remainder of your life. But if you wait, or if you are simply unaware that this window exists, you could miss it entirely. That is why this conversation matters so much right now, and that is why I want to make sure you have the complete picture before we go any further. Now, before you assume that this law affects all retirees in the same way, I want to pause and make something clear. It does not. The impact of this legislation will vary depending on your income level, your filing status, your age, and the sources of your retirement income. Some retirees will benefit enormously from these changes. Others may see more modest benefits, and a smaller group may not see much difference at all. I am going to walk you through exactly who benefits, when the best time to act is, and why the rules work the way they do. So please stay with me because the details here truly matter. Before we go deeper, I also want to offer a word of reassurance. This is not a rumor. This is not some secret payment that only certain people know about. This is not political spin. What I am sharing with you today is based on real legislation that has been officially signed into law and is already taking effect in 2025. The provisions I will describe follow clear, official rules, and everything I explain is verifiable through public sources. My goal today is simply to be your guide through this information, to help you understand what it means for your household and your future. Now, you may be wondering why there is so much confusion about this law. The truth is, many retirees are hearing different things from different people. Some have seen headlines suggesting that taxes are going up. Others have heard that new deductions are being added. Some have received conflicting information from well-meaning family members or neighbors who read something online. The confusion is completely understandable because this legislation touches on several different parts of the tax code at once, and different provisions affect different people in different ways. If your neighbor heard that the law did not benefit them, that may be true for their situation, but it may not be true for yours. Income levels, marital status, and the structure of your retirement accounts all play a role. You are not confused because you are not paying attention. You are confused because this law is genuinely complex, and most people have not had someone sit down and explain it in plain language. That is exactly what we are going to do right now. Here is where many retirees tend to get confused, and I want you to pay close attention to this next part because it is the foundation of everything else we will discuss. The key to understanding how this law benefits you lies in understanding the standard deduction. The standard deduction is essentially a tax-free zone. It is the portion of your income that the federal government allows you to exclude from taxation automatically, without requiring you to list out individual deductions. The larger your standard deduction, the less of your income is subject to federal tax. And starting in 2025, that standard deduction just got significantly larger. So let us walk through the numbers carefully, because this is where the real value lives. For 2025, the standard deduction for a married couple filing jointly has been increased to $31,500. For a single filer, it is $15,750. But here is the part that most articles and news reports have not fully explained. On top of that base standard deduction, taxpayers who are over the age of 65 receive an additional deduction. For a married couple where both spouses are over 65, that additional amount is $3,200, $1,600 per qualifying spouse. For a single filer over 65, it is an additional $2,000. So already, before we even get to the new senior bonus deduction, a married retired couple over the age of 65 is looking at a total standard deduction of $34,700 in 2025. That means nearly $35,000 of their income is completely protected from federal taxation. For a couple with an adjusted gross income of $100,000, only a little over $65,000 of that income would actually be taxable. That is already a powerful protection, and it is now permanent law. Now, there is one question I would like to pause and ask you directly. Do you know what your current standard deduction is, and are you making full use of it in your retirement planning? If you are not sure, this is a great moment to write that question down and bring it to your financial advisor or tax professional. Your situation is unique, and understanding your own numbers is the first step toward making the most of this opportunity. But the story does not end with the base standard deduction. This is where the new law introduces something truly unprecedented, and it is available only for a limited time. Starting in 2025 and running through 2028, there is a brand new senior bonus deduction of $6,000 per qualifying individual who is over the age of 65. For a married couple where both spouses qualify, that is up to $12,000 in additional deductions. And here is what makes this particularly powerful. This bonus deduction applies whether you itemize your deductions or whether you simply take the standard deduction. For the vast majority of retirees who take the standard deduction, this $12,000 stacks directly on top. That means for 2025, the effective total deduction for a married couple over the age of 65, combining the standard deduction, the regular over 65 addition, and the new senior bonus, comes to $46,700. Nearly $47,000 of income, completely shielded from federal taxation. There are two critical details about this senior bonus deduction that you must understand. First, it begins to phase out once your income reaches a certain threshold. That phase out starts at $75,000 for single filers and $150,000 for married couples filing jointly. So if your income is below those levels, you may qualify for the full bonus. If it is above those levels, the benefit begins to diminish. Second, and this cannot be overstated, this deduction is only available for tax years 2025 through 2028. After that, unless Congress acts to extend it, this benefit disappears. This is why so many financial professionals are calling the next 4 years a rare and critical planning window. So, what does all of this mean for you personally? It means that the next 4 years represent an opportunity to take meaningful action that could reduce your lifetime tax burden. If you have money sitting in a traditional IRA or 401k, this window could be an ideal time to consider Roth conversions, moving money from a pre-tax account to a tax-free Roth account while your effective deductions are at their highest. With deductions as large as they are right now, you may be able to convert significant amounts while keeping your taxable income in a lower bracket, or even while paying little or no federal tax at all. If you hold appreciated investments in a taxable brokerage account, this window may also give you the opportunity to harvest gains or reset your cost basis while your tax liability is reduced. And if you are approaching the age when required minimum distributions from your retirement accounts will begin, now may be the time to start smoothing out your income in advance so that those future withdrawals do not push you into a higher tax bracket. Now, I also want to speak briefly to those of you who may be concerned about timing, particularly around when your Social Security benefits, pension payments, or other retirement income arrives in your bank account. The timing of your payments themselves has not changed under this law. Social Security continues to follow its regular monthly payment schedule based on your date of birth. Second, review your current tax situation. Pull out last year's return and look at your adjusted gross income, your current deductions, and your taxable income. Understanding where you stand today is essential before you can determine what moves make sense. Third, Speak with a qualified financial advisor or tax professional who understands retirement income planning. The numbers I have shared today are real and verifiable, but your specific situation, your income sources, your account types, your filing status will determine exactly how these changes apply to you. Fourth, if you do not currently have a retirement income plan built around tax efficiency, now is the time to build one. The window will not stay open forever. I also want to take a moment to warn you about something important. During times of tax law changes, scammers become more active. You may receive phone calls from people claiming to represent the IRS or the Social Security Administration, telling you that you need to verify your banking information to receive a new benefit or avoid a penalty. I would like to hear from you. Have you already spoken with an advisor about how this new tax law affects your retirement plan? Or is this the first time you are hearing about the 4-year planning window? Leave a comment below and let me know where you stand. Your question might be the very one that helps someone else watching this video find the clarity they need. Let me close by reminding you of something that is easy to forget in the middle of all this complexity. The income you receive in retirement, your Social Security benefits, your pension, your retirement account distributions, represents decades of work and sacrifice. You earned it. The tax system follows rules, and when you understand those rules, you gain the power to protect more of what you worked so hard to save. The 4 years ahead are not something to fear. They are something to use wisely. Whether you are already retired or approaching retirement, the information in this law is relevant to you and the opportunity it creates is real. Do not let this window close without at least reviewing your plan. Talk to your advisor, run your numbers, and make sure your retirement strategy is aligned with the best tax environment we have seen in years. You have the information. Now is the time to put it to work.